And we're in process to record the meeting, and I'll continue to monitor the waiting room as we get started. But in order to make good use of folks' time, I would like to invite us just to gather for a moment in prayer, and then we can invite Erik to begin his conversation with us today. So can we share in prayer together across these various places where we're located? Loving God, we thank you for these faithful stewards of your communities of faith here in central and southern Alberta. We thank you for your spirit that inspires us. We thank you for the prudence and diligence that each of these individuals shares in their ministry on behalf of the United Church. We thank you for the blessing of wise leaders who can offer new insight and guidance to us. We ask that you bless our conversation today. In Jesus' name, amen. So without further ado, I'm going to invite Erik to, I believe you should be authorized to share your screen, and I'll just monitor the waiting room.
Okay, and you should have my regular screen there, and I'm just in the throes of putting up the full-size screen. Do you have that, folks? I think you might. Folks, have you got a cover screen there? I think you probably do.
I can see it.
Okay, so good afternoon, everyone. I've been introduced already. I'll maybe just introduce John Chippendale as well. John is Vice Chairman of Hub International here in Canada, and has been involved with the church program, basically more or less created it, or certainly grew it significantly back in the 90s. And I think there was a brief time where he left or we left or something, but he's been involved with the program a long time.
No, I need access.
If folks could mute your audio except for the speakers, that would be really helpful.
Okay. So listen, here we go. Insurance is the kind of thing that most people hate to pay for until they need it. And, with all the other expense pressures that we're facing, the escalation of insurance premiums has been a real challenge for congregations across the country and all our ministries, frankly. So with that, I'm going to announce a couple of new things first, and then we'll dive into the program. Something that we have that's brand new, has not even been formally announced, but is live on the website, is a really slick application for congregations that want their tenants to have insurance, and it's really cost effective. I'm actually checking to see if I went one slide. No, I didn't. Okay, so this is available on the UCC Protect website. You like to have your tenants have insurance. You like to have events. If you're having events and so on, this all happens. If you go to the web link here, it's really easy to use. I've been test driving it myself. It's available around the clock. It's a pure internet thing. It issues a certificate of insurance right away. And for a 3-hour birthday party for 30 adults, I tried it for my own church. And if you chose to require insurance for something like that, and by the way, we encourage people to, try to have all their user groups have insurance. It would be $12.83. And you triple that if you're serving alcohol and have a special occasion permit. But this is a really new feature, and it used to be way more difficult to get. Just the processing was cumbersome no matter where you went. So I love this application. John took action to make it. This used to be available. Our third-party insurance used to be only available to those who participate in the affinity program, which is about half the churches in Canada. But John made the case, and I can say that this is available whether you're with the UCC Protect program or not. So now talking about the new insurance. Oh, I guess maybe I'll mention too, all congregations have directors and officers coverage automatically that's paid for by the national church. That's been in place for over 10 years now, and basically means that we don't have to have any confusion over whether people are covered or not. They are if a congregation is in good standing. So those are two features that are available to all of you, and most of you probably know that. So we'll talk a little bit about the rollout or what we're calling now UCC Protect United. And it, we have a bunch of slides and stuff, but the whole idea that Barrie had a number of questions for us, Barrie Clayton. So the whole idea here is jump in anytime with questions, or at least pop them into the chat or something, so that whoever's looking at them can pop questions out to us. We have more information on the slides than we plan to speak to. It's way more important to get your questions or suggestions or concerns. In any case, this self-insurance type program was approved by General Counsel just under a year ago. And we had actuarial studies and stuff that showed that we could reduce premiums for all participating congregations and outreach ministries and camps and the folks we have in the program. So that's already on track. The General Counsel approved a $3 million allocation to capitalize this thing, and we're already on track to save congregations over $1 million this year in insurance premiums. So that's a good thing, but I don't want to overpromise. We can't protect everybody from the giant increases in insurance costs that are happening in the industry. We do have reinsurers who are going to want their risk funded properly, but we hope this is a way to take greater control of our destiny, and we'll speak to that. And basically, what happens with this kind of arrangement is we take a lot of broker commission out of it. The local broker is removed. The national broker is on more of a fee basis and gets way less money. There's no profit incentive. This thing only exists to benefit the participants. And again, talking about not overselling this thing. I told the General Counsel that the actuarial studies show that if we have normal claims experience for a couple of years, this thing will be completely self-sufficient. If we have a bad claims year early, the General Counsel would have to put some more money in. So this thing launched, we really rushed it to hit the December renewal cycle. I sometimes question that because we've been working literally night and day since then, and we could have tackled this in a slower way. That our service hasn't been what we wanted it to be, but December was our biggest renewal. We had almost half the churches in the program were in December, so we wanted to get them their savings. And that's how we've rolled it out. We have renewals in December and March, June. And one of the things that we're doing is we're aligning it all to have an annual insurance renewal cycle in December. So if somebody gets a policy right now for March, they'll have a 9-month policy. When we started in December, we didn't even want new entrants because it was going to be a problem. We knew we didn't have the capacity, and we were certainly right. But a new entrant does have to complete an application. We'll ask for the existing coverage that we're competing against to be submitted with that, and we expect to offer savings. We're targeting at least helping you avoid the increases the industry will give you this year. And even more, we're hoping we're targeting a double-digit reduction. And by that, I mean more than 10%. But we can't guarantee that because we have to see what coverage you have. And in a lot of cases, folks aren't insured for their full replacement value. And there's all kinds of complexity there. So we're going to just talk a little bit about the program, but want to open it up. I'm not going to sit here and say, here are all the safety the risk management things you can do. What we're really trying to do is the church. We had a lot of conversation and we said, what can the general counsel, it's in Toronto and we're the corporate office. I mean, how can we help? How can we not be a pain? And we thought that if we could deliver tangible savings to all the congregations in the country, that would be really, really significant coming out of COVID. So this is the kind of stuff we'll talk about a little bit. So again, what we're aiming to do is in the short term, reduce premium rates. And we're doing that. We also have there's a lot of broken telephone when there's a national broker and a local broker. And I don't want to in any way diminish the tremendous value a local broker provides. You can sit there and you can get face-to-face time. You can get help explaining the coverage. Insurance applications are frankly a pain in the butt to complete. However, if we forego that with this program in order to save significant premium dollars. The coverage is identical to what was offered in the affinity program before, which is all the abuse coverage, all the property and boiler and all the things that are supposed to be in a property insurance coverage and a comprehensive general liability. And with insurance longer term, if we get more people, we think that will grow the participant base. Insurance is all about spreading the risk. And we think we can do a better job if we're all participating in a program that's already set up for the benefit of the members. It's like a co-op or a credit union or anything like that, where it doesn't have the same profit motives that the commercial enterprise does. So John could probably talk a little bit about the insurance market challenges, but our premiums in the affinity program were going up dramatically, even though our loss ratios were great. Or great is a relative word. There were still losses, but we're very, very good considered from industry standards. So the only way we could do anything about that was to try to basically take on more ownership and risk management, because this is happening across the industry. It doesn't matter who you're insured with. You've probably seen your premiums go up between 50 and 100% just in the last 3 or 4 years. Insurers are a little leery of churches because a lot of our buildings are old and may or may not have deferred maintenance. And United Church people are notoriously fiscally prudent. So we're shopping that stuff around. There isn't a lot of, insurance anyway tends to get shopped around. So that's the market context. And I want to say we now the United Church is sort of with its own insurer. We control can influence the premiums on the front end, but we still have to have reinsurance companies, and we have the biggest reinsurance companies in Canada backing this program for large claims. So they still want to jack up their premiums. So there's a limit to what we can shelter, or there's a limit to what we can manage there. There will be ongoing premium escalation. You may have read about, building cost inflation, all that kind of thing. And then for churches, insurance companies are always asking, about when and how you updated your electrical, your heating, your plumbing, all those kinds of things. So I'll stop there for a second. Are there any questions to date, Joel or Billy or anyone, or should we keep going?
So far, there's no questions in the chat, Erik.
Oh, okay.
Been a few comments, but if there are people with questions, I suppose they can let us know.
Yeah. Okay. Fair enough. I mean, we've got a big group, but as long as people are muting and unmuting, it should be manageable, right? So again, here's a quick recap of what we did. We created what's called a captive insurance company. And by the way, this isn't radical. School boards do this, all other charities do that, private sector companies do this as a way to try to manage their insurance cost. Ours is called Kindred Insurance. I named it myself. It's intended to reference the fact that we're all in this together. We already, in the affinity program, we're doing some self-insurance. We were doing up to $50,000. And this is a way to tell the insurers that we cared about what happened with the insurance policy, because we had, to use the phrase, skin in the game. Now it goes all the way up to $2 million. So we collect the premiums from everybody, just the way the insurance program always worked. Any policies that we issue are by AIG, which is called a fronting insurer, and we have to provide them some guarantees, but basically we get to use their policy and so on. There is further reinsurance. If we ever had a year where there's more than 8 million of insurance of losses, our requirement becomes zero. So that's the maximum that this entity would ever have to be exposed to in a given year. Now, that's still a lot. But Barrie was asking about, who we have behind this. How can, hey, this is a church thing. How is that going to work? We're not exactly famous for world-class execution on things. The structure here is to protect. The claims will be paid no matter what. It's just a matter of by whom. Intact is the biggest reinsurer of this program, and they're the biggest company in Canada. So this thing is very, very financially stable. We've reduced.
Erik,
sorry, go ahead.
Sorry, Erik, we do have some questions that are coming aboard now. So when appropriate, I can bring some of these questions to the group. Okay. Well, I mean, this might be, again, just to complete this slide, we have reduced the premiums year over year. So at a time when people's premiums are going up and inflation costs being added, we're actually reducing premiums. And we list a few of the other things that are going on here, which I'll speak to. But let's hear a few questions. You must be sick of me by now. So questions include, how do we add a rider for renovations? Okay, well, if you're having, that is, I think you've got a construction project and you need to have insurance for that period, right? Over to John.
Yes, if you're doing construction, you buy what's called course of construction insurance, and we can arrange that through the program. But if you're not moving walls and doing major stuff, it can be accommodated within the program.
And John, when you say within the program, do you mean within the base policy, or do you mean within the captive? Within the base policy, I'm saying I'm staying away from what layer the captive does and what layer other insurers do, but the whole program responds to renovations unless they're major structural, which we then get specialty insurance for that.
So I'm the one that asked that question. The people that we had for our insurance company before, we had to fill out a form that disclosed things about the project and our relationship with the contractors and their insurance and all of these things. Is there a form repository that I can find, or a form to use to disclose all these things? Because this is a situation that's happening right away.
Yeah, I can get you a sort of a template of key information for course of construction.
And Ann, remind me, are you with the UCC Protect program or outside it?
We're with.
Okay.
And I guess I'll get your email address at the end or something like that.
Okay.
Another question is relating to contact information around questions, changes, additional insured, and what the response time typically would be to these kinds of changes.
Well, I'm going to again flip that over to John, but you're going to see a slide. Our service level during this transition is, we've been swamped, frankly. But we're also building out some new systems and so on. So by summer, we expect to be in more of a steady state mode. Over to John.
Yeah, our mandate all the way through was 48 hours to respond to that. However, sometimes, for instance, if you need to get a certificate of insurance to provide the municipality or something, you can do it same day. And as Erik pointed out, with the transition where we moved away from local brokers, and when we put it all into one pot, there's been a lot of extra work to be done, and we wanted to get to savings, as Erik mentioned. Now with the new system that we have, our ability to triage and focus on 24 to 48 hour turnaround is what we're aimed at.
Thank you. Following up on that, I have heard in the course of my work here in Chinook Winds, some occasions where people have not received their documentation, even though they've been paying into premiums, and we've got a question related into that. So if we haven't yet received the documentation around our coverage, but the premiums are being paid since, as early as December, what's your response to that? What thoughts do you have on how to manage that?
Sure. Well, let me take that one. We actually predicted this last fall and warned people that we were going to do it this way. In December, if you're paying and if you've set yourself up, at least weeks ago, you should have your policy already. And if not, you could maybe it went to the wrong person, or we can reissue it type thing. That's for December. For March, we haven't pushed the button yet to issue policies, and we've been I'm not going to call them certificates of insurance, but we're going to do that shortly. We've been doing this on an after the fact basis for the first two renewals. For the fall, we're going to be back in the normal insurance cycle where we're going to be issuing the certificate of insurance with the renewal 30 to 45 days in advance of the renewal, so that folks will have a chance to see it. But this is something that we knew would happen, and we basically said, hey, your policy is unchanged in terms of the all the provisions and the amounts and so on, unless you've changed them. But it is an annoyance that we've had to put up with in this transition.
Yeah, and Erik, just to piggyback that comment, one of the things that led to the extra work was one of the values of the program is 0% premium financing to help spread out the annual premium across the 12 months. But we had to get people to put their banking information in again because we had changed the insurers we were involved with. And that's a step that led to a little bit of that delay. But once that's in, it'll never become an issue in the future.
We have a couple further questions related to some specific details of coverage, some terminology. We have a question regarding a claims-made policy. If the expiring policy is a claims-made policy, what does that mean? And also, what is the prior acts coverage? What does that mean?
Do you want me to take that, Eric?
Please do.
Okay, your general liability, which is like slips and falls, is covered on what's called an occurrence form, which means the annual policy that was in place will be the policy that will reply to claims regardless of when they lead to a suit, probably somewhat subject to statute of limitations. The directors and officers liability insurance and the abuse insurance is on what's called a claims made basis, which means that the insurance policy that is in place when the claim is made applies. And the simple term, and the reference to a prior acts meaning, and you would want to get the prior acts back to the first day you went to the claims made. So the D&O policy goes right back, I think, to 1993, if I off the top, which is basically the first year that people started buying that insurance for churches. And the claims made abuse covers goes back to March 2016 when we moved from occurrence to claims made. So the idea is that there's no gap in coverage, and a claims made policy allows for future management of changing trends.
Right. So that sounded pretty technical to me, John, and I know, and I understood what you were saying. But basically, insurers like a claims made basis, because if we change insurers, they're done. Right, because it needs to be when the claim is made. That's the easiest way for me to explain it. And so that's another way that we contain costs, but we also want to make sure that people understand that, because the worst thing you can have is if you actually know about something, that's, and you're changing insurers, you need to make sure that you disclose anything you know as part of your transition.
Good point, Eric.
Okay, keep jumping in with questions. Again, some of this stuff is general. It's way more important to get your questions. The single most important success factor for the United Church here, and our ability to reduce premiums. Okay, if we put in $3 million and we're able to reduce your costs $3 million one time and reduce your costs by $1 million a year, that's a staggeringly excellent financial return. But it does need, claims to behave, and there will be times. I mean, the whole reason we have insurance is that stuff happens, right? So the emphasis in trying to put out educational materials and so on how to reduce risk and reduce claims exposure. We're hoping to have more information available to help you out on that. But the whole idea of this program is to streamline administration. That's another way. We're no profit, reduce commission, and streamlined administration. That's how we're trying to get the costs down. The underwriting process has frankly been really, really painful, where we've been referring every single case to outside underwriters. In this program, we contractually will have more what's called delegated underwriting authority. And if there are underwriting profits, it's all invested right back in the program, either by reducing premiums, or if there's enough money, I'm going to exaggerate to make my point. We'll buy everyone a smoke alarm, or we'll pay for appraisals. We'll find any excess amounts are basically available for the sole purpose of our church insureds. And so we are taking risk here. The general counsel office is certainly taking risk. But I personally felt that this is the most tangible thing we could do right now, is take some risk. We've got, actuarial backup and all that, but take some risk to try to reduce the expense pressures out there, on an item that is probably your third biggest cost now. There's staff, building and insurance, right?
I do have some more questions coming on the screen now.
No, keep them coming. That's the best part.
Further question around prior acts coverage. What is the definition of prior acts coverage?
It's a prior act is something that happened before the current policy period. So it covers everything that it didn't surface in the past, but is surfacing now.
So, John, just to use a live example, could that be an accusation of inappropriate behavior 20 years ago, that kind of thing that just comes out now?
Unfortunately, that's a complicated answer.
Yeah.
Because, and I can think of a current situation that's like that, because if the policy was on the occurrence form 20 years ago, that would be the primary policy. But as I said, we started the claims made on the abuse coverage in 2016. So it would cover everything back to 2016, when prior to that, it would be covered under an occurrence form policy.
Right. And just to say, folks, this is the general concept of which insurance policy gets hit first for claim costs. I mean, that's why we have the third party insurances. So if your tenants cause something, it doesn't hit our insurance program. If it's the same concept with the occurrence form. If we go back to an insurer that maybe we don't even do business with, but they're still on the hook for the claim, and that happens with some regularity.
Yeah, and I noticed one of the questions that was popping up on my screen that's tied to that is the need to report a potential claim. The best advice we give, if you know of an incident that might give rise to a claim, report it.
Absolutely. Now, as homeowners and stuff, we tend to think, gee, will this jack up my rates? And on a smaller claim, we might not. But when you're talking about your church or an entity, a business entity, it's way more prudent to report a claim that might not end up being a claim, because otherwise you run the risk. And we have a very a high profile case out your way where not reported as a claim, and then by the time it was, the insurers were saying, well, that's way too late for us to be able to respond.
I do have a couple of other questions on specific areas of coverage. One is, does UCC Protect have cyber insurance coverage? What kind of deductibles apply? Also, we're asking questions about summer camps. Are they covered under the existing insurance? Question on solar panels as well. Are they part of a policy, or are they somehow on a floater related? We do have those questions on specific coverage. Summer camps, cyber, and solar panels.
Okay, so let me take some of it, and you will notice a pattern where I answer general questions, and if there's anything specific to the policy, it's over to John. On cyber, there isn't a cyber coverage within the UCC Protect plan. Some competing products offer a very limited amount of cyber coverage, but I actually got some for the whole church for about a year, I guess about a year and a half ago. But frankly, when the insurance company saw what kinds of stuff was, the relative unsophistication of some of our places, they stepped back from offering a blanket coverage on a group basis. We are looking right now at a program that, instead of or let me first say this. Our system, our 2,000 pastoral charges will never, as a group, qualify for cyber insurance. because it's all over the map. I mean, I can just, all I have to do is ask. We've got 53 participants here. If I ask you to put up your hand, if you use multi-factor authentication to access your church systems, I would bet we would have a low number of hands up. There's one, and I'm not even surprised it's Ann, but we just don't qualify. We can't warrant that we have those coverages. So if you do, you could consider getting cyber insurance yourself. But what I am looking at, and I've got, John's been very helpful getting me really good advice on this. I am looking at a national cyber advice program. So it doesn't pay your costs per se, but it directs you, it either tries to solve the problem yourself, and like half of cyber type things can literally be solved over the phone if you're talking to the right person, but also refer you to the resources that you need and offer advice. And I'm persuaded that that's actually more valuable than cyber insurance for our system, where we're not so likely to be attacked, but we're not as likely to get insurance. So that was cyber. Summer camps, I think that question, camps themselves have to, are incorporated, have to get their own insurance. So I'm assuming this relates to youth programming that might happen at a church. I'm going to assume that's the case. And that's part of your youth programming. If it's at the church, you're okay. If you're going farther afield, you might want to at least disclose that or ask whether there's an additional coverage needed. So that's what I would do with camps. And the third one I'm blanking on. What was that?
Solar panels.
Oh, yes. And so, John, you can maybe answer that. But again, if you've disclosed solar panels, then it should be part of your core underwriting, as I see it.
Yeah, I mean, I think the comment was, is there a floater for it? The answer is yes. So if you have a solar panel, you identify that you have a solar panel, and the coverage is provided for that. Okay. Just a comment on the camps, Eric. Our program covers congregations, and then it covers affiliated entities, and then some affiliated entities are in fact camps in themselves, and we write a number of camps, which is a more formal way of doing it than what Eric referenced as youth camps that are automatically part of the congregation's policy.
Right. Yeah, and I'm just distinguishing between what some congregations call a Bible camp, where they run a youth program. Yeah. Okay. And if I have that wrong, folks, I'm sure someone will correct me.
A couple further questions involve a need to report potential claims. How do we identify what may become a potential claim, when it should be reported? And then there's a question around logistics on coverage. If current insurance ends June 30th, can we set our new coverage to start after that? It's a non-UCC insurer right now.
Well, you should certainly, you want to have continuity of coverage, so that like you'd be looking for basically you'd be asking UCC Protect to start their insurance when the other one ends, I would think. Or if there isn't a significant penalty, you could consider applying now. And but you have to watch out, if there's something like a 10% early cancellation penalty, that would eat up your saving pretty quick. So that's my comment there. John, anything to add on that?
Yeah. Let me try this. And as you've seen so far, sometimes Eric very correctly points out that I'm too technical, but these are very good questions. If you move from one insurer to another insurer and you say, well, how do I know where to report a claim and what is a potential claim? A potential claim is when you've been advised of an allegation or you have received a writ and a statement of claim. If you're not aware of anything like that, you can't act on something you're not aware of. So it's a third party alleging negligence on your part. And you should always, as we said earlier, just report that when you hear about it. So if you were moving over to UCC Protect on June the 1st, and you have an allegation on May the 1st, report it to your old insurer. If you have an allegation on June the 2nd, report it to your new insurer.
Yeah, and John, just to push you on this a little bit, if someone if there's a vehement disagreement at the church, and someone stomps out the door and yells, "I'm going to sue you," that's not the same as receiving a writ or anything.
Correct. Correct.
Yeah,
it has to be in written format.
Mm-hmm. And if someone, I'm just spitballing here, if this happened at my own church, actually, where a friend of mine, an elderly friend of mine, slipped on the stair and banged her head, and we checked to make sure she was okay, and I drove her home when she insisted that that's what she wanted, and I checked in on her and stuff, but none of that is a claim either. Would that be correct?
Correct.
She would have to initiate a claim for me to report it.
That is correct.
Okay.
Whereas so a non-liability claim, you have a water damage claim and you notice mold in one of your rooms, you're responsible to try to solve that problem until it becomes a river, so once you see something, or once you're advised of an allegation of negligence, that is what is a potential claim.
And I'm going to mention one that's sensitive. I bump into this at least 2 or 3 or 4 times a year. There are local issues around theft or embezzlement. I always say that a successful fraud is never committed by someone that wasn't trusted. There's a double negative in there. And sometimes folks like to try to sweep that under the carpet, or keep it to themselves, or see if they can fix it. And that's fine. That's, restorative justice and all those kinds of things. But you have to be really careful, because if it doesn't work out, you haven't reported it to the police in a timely fashion and all those kinds of things, it does complicate the claim situation.
Eric and John,
Okay.
Thanks, Eric and John. That covers. Oh no, one more question just came in. How long does the person with an injury have before they can claim a liability? How far back does what's the statute of limitations, so to speak?
Well, the statute of limitations used to be 6 years. In certain provinces, it's narrowed from that. But it's 6 years from the time you ought to have known the problem. So it doesn't mean that 6 years is the restrictive time.
Yeah.
Thank you. That's all the questions for now. So happy to hand the screen back over to you there, Eric.
Okay. And I'll just emphasize the last point on this slide. We're direct. When we have direct negotiation with reinsurers, every insurance company has reinsurers too. But at least we wouldn't, by trying to negotiate direct, we aren't paying, like a handling charge, for example. Like, that's now hopefully we have, and this is what John is supposed to be, our sophisticated negotiator and knows the market and all those kinds of things. So we're not a naive buyer either, but in the currently, if you read the paper, or if you're in the industry, you'll know that it's a tough time in the insurance market still, and that reinsurance rates are tough, and we're trying to take control of our own destiny here.
I'm going to add a comment to that, Eric, because it would add some context. The program historically has evolved to be about a $7.5 million annual premium. So the captive that's taking $2 million of the risk is taking about 60% of that premium. And as Erik said, to the extent that there's underwriting profit, that will be reinvested back into other additional products and or risk management initiatives, reinvested back in the business.
Okay, and just now, the next slide lists is a bunch of the normal things that insurance policies are supposed to and do cover. And so I'm not even going to speak to this other than to say, one of the things we're in the midst of doing is negotiating major discounts on appraisals. So if appraisals are going to be mandated by any insurer that wants to have, to offer a full replacement cost coverage. That's the only way to do it, is to have an appraisal and be able to update it periodically. We, on the other hand, are also going to work. So we're in the midst of negotiating a national deal where outfits that have national coverage will give us group discounts and stuff, because appraisals can be very expensive. Out your way, you've also got an outfit, I think, based in Edmonton, if I'm not mistaken. So in Alberta, you've actually got access to a respected valuation person for insurance who does do this at a lower cost. So I can provide that name to Joel and the property committee. And the guy's name is Scott Cruikshank. And we may even have him travel around the country and do some stuff for us, depending on how our negotiations go with a larger firm. So again, this is just the other products, the third party, the renting, what does it cover? The legal defense, if they're responsible, there's always going to be, people always go to whoever has the deep pockets, and whoever, everyone ends up getting mentioned in litigation, but we want to be able to have our policy respond, and that's what each of these coverages do. I mentioned directors and officers. I want to stress that directors and officers in a church context is not just your official board. Okay, it includes all the folks that are involved in your committees, that are involved making decisions that could have you sued as a director or officer. It covers all the folks on the committees that are making decisions. Okay. Cyberbox Assist, this is the one I mentioned earlier. This is, we have a proposal. I'm just looking to take that to my finance committees and so on. We're looking to offer a coverage for all congregations, and potentially other ministries, but we start with congregations on predicting and preventing and responding to cyber threats, as opposed to just offering an insurance coverage that pays a certain amount, but leaves you on your own. Again, this is a slide about reducing, and we generally like to include more information in our slides. Those of you who participate in my treasure webinars will know that I always make those the small print ones where you can go read it later. But these are some practices that are pretty normal for your home, and it certainly should be the case for your church, to have appropriate screening, and you do need to be following church practice, United Church protocols, particularly when it comes to things like screening volunteers that work with vulnerable populations, that kind of thing. So this is the biggest one I want to flag for you.
Just a couple of questions, Erik, just before we move to that slide.
Yeah, actually, this is a good time to break. Go ahead.
Yeah, so question here regarding explaining the difference between a replacement cost coverage and specific dollar amount. What do we have? Can you explain some detail on that?
I'm going to let John speak to this a bit as well, but what you have depends a little bit on who you're with and what your contract says. So a stated amount insurance, for example, is offered by a number of the competitors, and you are likely on a co-insurance basis there. So if you had a larger claim, like $100,000 or $1 million, you're likely not just on the hook for your deductible. Okay, and John can explain that a little better than I can. The whole area of replacement cost is an interesting one for the church, and it's almost as if whoever asked that led into this slide. Replacement cost is how we think about insurance, at least in our home, right? Like if your home, burns down, you're kind of thinking you might replace the home you had. That may not be the case with a lot of our churches. And that's why one of the reasons I championed and got this thing approved, this captive arrangement, is that we will have a greater opportunity to perhaps customize our coverages. So to go with, say, a lower amount of insurance. For example, you can, in the extreme, I'm going to step back for a second. The trustee handbook and our manual and stuff talks about trustees being responsible for ensuring, quote unquote, adequate insurance. But what is that today? If you've got a 1,000-seat stone cathedral, are you going to replace that based on membership and building use? Probably not. So the idea of there being something different from a pure replacement cost is something that we want to look at very actively. In the extreme, you could have something called wreckage value, where you don't have basically it pays to clear the site. And we think that there's room to have something in between where there could be a significant cash payout, but and this could be sort of quote unquote actual cash value, where you weren't going to replace, you aren't getting the replacement amount of insurance, but there's still a significant amount that might help you build a smaller place or be able to rent something for a long time. The other thing I would add there is it's really, as we explore these things, it's not linear. So for example, if you have, let's just say hey, I want to, instead of being insured for 2 million, I want to be insured for 1 million. Well, that doesn't save you 50%. That doesn't save you anywhere close to 50%, because most claims are smaller ones. And so the insurance company hasn't necessarily broken down their premium analysis to say, they still want to protect against the fact that you might have smaller claims. And one more thing, and then I'm going to leave it to John to sort of play off of what I've said. I don't know if people know this, but no insurance policy pays you the replacement value unless you're replacing. Okay, and so that's another thing. We've had a couple of claims this year that our total losses. They hit the other program, by the way, but nonetheless, where the local community of faith made the decision they weren't replacing. So basically, in that situation, they get the cash value. There's calculations. It depends how old the building is, all kinds of things, how much depreciation. But that's what they chose to receive because they weren't going to replace. John, jump in before I bore people to death.
Let me try to frame this. So as the top of this slide says, replacement cost just means repairing or replacing with a like kind and quality without depreciation. As Erik said, if you don't replace, you get what's called actual cash value, which means it does take in consideration depreciation. And if you've got a building that is depreciated over, 25 or 30 years, many of the older buildings would be largely depreciated already. So if people want full replacement costs, that's why there's this issue of how do we make sure that current replacement costs with inflation is done, and that's why you have appraisers. We're going to do an appraisal, as Erik pointed out, where they come in and do a physical inspection, but then in future years, it can all be done with a computer program so that we can really reduce the costs of that. Having said that, let's say, and I'll pick a number out of the air, let's say 50% of all churches wouldn't replace. Then the question is, they need replacement costs for non-full claims, for non-large losses, but they don't necessarily need it if they have a full loss. And that is the discussion we're having. Some churches in rural areas where participation is declining, maybe they only need what's called wreckage value. And so I would say our number one objective is to leverage the insurance industry, because we have become an insurer, to solve this problem, which I think will be the most important thing in reducing costs for churches in the future. And the example that Erik used, and our largest competitor, Ecclesiastical, who is in itself a religious organization, for some churches that it insures, United Church, it has what's called co-insurance. And this example shows it so that even if you have a small loss and you weren't insuring to full replacement cost, let's say you might end up having to pay $10,000 of a $100,000 water damage claim. Well, that's for maybe more than you pay for annual insurance premium altogether. So our program does not have co-insurance unless it's been long outstanding to get an appraisal. So our objective is to better design flexibility so people can either have wreckage value on property or actual cash value if they weren't going to replace. And that is our objective to be done, Erik, maybe even by the end of the year.
Yeah. And that's a big deal. I just want to stress this next slide. The only reason we do all this, okay, is to try to have a program that insulates us a little bit from what would otherwise happen if we were just dealing with the commercial insurance market on our own. So as I say, we're taking on some risk. The whole purpose is to serve the participants again. So no profit, reduced commission, and a whole bunch of this is just having the conversation around what we need. I believe we need tailored insurance that isn't full replacement value, and we need to A, dumb it down, and B, we need to make sure that either with your in discussion with your regional council and with your congregation, that it doesn't turn into a big bun fight when something bad happens. So, if you've decided to go this route and go wreckage value, for example, that's probably a proper decision for a number of your communities. But you can't. You need to protect yourself from folks. Next day quarterbacks second guessing when something bad does happen. You need to disclose that. I say the same thing to treasurers around the extent of audit that you have done. It doesn't make sense to pay for a full audit for many congregations anymore, but you need to make sure your congregation knows that. No one should wear this. No trustee should wear this decision on their own. No treasurer should wear this decision on their own. And we probably even should have an inventory with the regional council so that everyone's on board with what was deemed to be adequate insurance.
Couple of questions. Just I'm going to have to hand over the hosting duties to Sue Brodrick. So welcome to Sue as
Hi, Sue.
new host. Do have a couple of questions just before we sign off. One is relating to this around what do you get covered? We have questions around rules of adding or deleting certain costly items, for example, stained glass windows that are never going to be replaced. Or, and another question related to that, is there a way in which we can get someone to come and have a look and, you know, check out our building from the point of view of insurance issues in the course of, you know, getting our coverage set up? So what can be covered, and can we get somebody to help inspect the premises, so to speak?
Yeah, so a couple of things. You know, again, the mainstream insurers have this locked in mindset around replacement value, and they say, hey, if you've got a Cassavant organ, you've got to insure it. You've got to disclose it. You've got to insure it. If you have stained glass windows, you have to disclose it. You have to insure it. Those are expensive items. I'm looking to have the flexibility where, as long as you see, they worry that even if you made that decision and signed stuff, you're still going to be a PR risk if there is a claim and you know, people disagree and stuff. The insurance company ends up being the bad guy and all that. We're all supposed to be on the same team here. So the idea is that if decisions like that are made and fully disclosed, yes, we should be able to adjust premium a little bit for that. John, do you want to comment?
Just a second. In terms of the viewing of the properties, the reinsurer Intact has selected some properties to do inspections on. And then we're also, as Erik's talking to this appraisal company who can do visitations as well. And between those two, it is something that we can arrange. And so for any church that wishes to have that done, please reach out to me or Hub, and we can arrange that.
Yeah, but I also heard that folks were looking for a risk management advice, and that's part of it. So you know, what we're looking to do is if someone's coming in to quote unquote put value the site, we also want them to offer risk management feedback to you. The problem is we're not set up yet for that, and so you would need to find it and pay for it at this stage. We do expect to be offering access to affinity pricing, but you also have an option that is the most cost-effective in the country with this outfit out of Edmonton. So I'll just mention that again, and I can provide details later.
And we have on the website what I call a self-inspection checklist. And in fact, one of the churches was looking for a new quote, took it and ticked off the boxes of what they do and what they don't do. And that's that was developed by us years ago to help be sort of proactive in terms of understanding your own risks and managing them. And there's no cost to that. So that's available.
Okay. So folks, I don't know what you were promised in terms of duration. We're a couple of minutes past the hour, but I hope you found this useful. We've got some web links here in terms of how to reach us. Email just being the best, because if I'm in a boring meeting, I can do email, whereas I'm not available by phone when I'm in a boring meeting. So we can start with that, but also happy to have conversations as needed. And that's the last slide. We'll make these slides available to folks as a handout, and perhaps put on your website or you know, for the regional council. But are there any other questions that folks want to raise?
So Erik,
go ahead.
there's one more. There's one question that I think you answered, but just reaffirmation. If we apply now with a current appraisal, can we have a current UCC Protect policy in place by June 30th, which is when our current policy expires? So if they've already got an appraisal, can they fill out to become a new UCC Protect client and be in place for June 30th?
And the answer to that is yes. But I just want to, again, we aren't trying to get business for the sake of getting business. So I just want to put a caveat on that. Yes, we can underwrite it. Yes, we can quote it, but it will be a short form policy to December 1. And there is, frankly, a strong likelihood of some upward pressure on premiums then. So if you put that, if it's you or if you put that applicant in touch with us, we will be, we'll make that point very carefully, but we are in a position to quote.
Yes. And there's a question here. It's John Chippendale. If you no longer own a property, can you get general liability insurance? The answer is yes. In fact, I would argue for some churches that are in financial constraint, one of the ways to reduce cost of insurance is to either buy wreckage value or to buy no property insurance. But I agree, it's very prudent to buy general liability insurance because that's third-party liability. So you can do that.
Yeah,
and just that's what we've been encouraging congregations, if they're now worshiping with another congregation, have sold their building, haven't quite directed where they're going to go. Anybody that's reached out to me as chair of property, I've said, make sure you still carry your general liability. Of course, you automatically carry your D&O, because I said the liability follows you wherever you might be. Because again, if you're sharing space with another church, they'll turn to your liability if it's one of your own parishioners first. So that's an encouragement that I have been giving.
Yeah, and just to say, I mean, I suspect all the folks on this call know this already, but it's, the world is just a more litigious place. So even when you think, hey, we're all friends and we're all members and stuff, if something bad happens, people have to do what they have to do, and there's always going to be litigation risk, whether you're in a small friendly town or whether you're in a big city. It's just the way the world is. So comprehensive general liability is a must. And I'm going to say, as well, that you should never, ever join a charitable board without making sure that they have D&O, because stuff happens.
Exactly. So there was a question about popping up the contact emails again, but we are going to make the slides available for everybody that's here. We have also recorded this, so you can listen to it again. That will all be sent out by our communications team, Shelley Denhan. And so you'll be able to look at it again. So most of the information that you're looking for, you will be receiving shortly. It may take a few days, and have to respect that we're going, next week is our regional event for Chinook Winds region, and Shelley's probably swamped, but within the next 2 weeks, you will receive this information, and the recording will be on the website. But have a little bit of patience for receiving this. And as chair of the property working group, I want to thank Erik and John for this presentation. We had our trustees workshop in March, and that whole workshop could have been about insurance. And having been an insurance person in my work world, not as an insurer, but that fell under my umbrella, I was able to answer lots of the questions. But thanks to Barrie Clayton, who said we should do this webinar, and by the number that it came to it, it was well received. And so I want to thank you both for taking the time to prepare the webinar and to share it with our trustees and others that are on this call in Chinook Winds.
Thanks, everybody. Have a great weekend and a successful meeting next weekend, I guess.
Yes, thank you.
Nice to meet everybody. Thank you for your time.
Thank you.
Okay, folks.